Good evening, everyone. It's a little after 6 o'clock here in New York, East Coast, and it's been a couple of weeks since I gave you guys an update of any kind. The last time I did it, Sam was out traveling, and so I did both bull and bear cases, if you guys recall. And I'm glad I was able to do that. I think it illustrated the point, the very important point, that the same exact analyst, being as objective as possible, can develop credible cases for both bull and bear counts, both scenarios. Where if you're in a trade or looking to get in a trade, that if you are truly objective, you should be able to develop a very credible case for your trade as well as one against your trade. TA is not a perfect science. It's much more of an art with elements of science. And so ultimately the best traders aren't the ones who forecast many months or years in advance, since most traders are taking trades that are intraday or intra-week. It's rare that a swing will go much longer than a week. So having a good macro view is important perspective, but that's not really what's going to make you a good trader or a good analyst. At least within the Trade Devils community, what we try to teach is to make money irrespective of where you are in the cycle by analyzing all, and not just the ones in your favor, but all likely probabilities that are technically valid, and then assessing where your risk is relative to the most probable bull and bear cases, and then looking for setups that work ideally in both scenarios, or at least if it's just one scenario that works, in that your risk is significantly contained in the other scenario. But anyway, Sam did a bull update yesterday, and so I'm going to go back to my bear mode and talk about the triple zigzag correction that I left you guys with a couple of weeks ago. Quite honestly, not a lot has changed. In fact, if anything, there's been more confirmation by price that that's a very probable case that we're about to experience. So what I was hoping to do today is give you some more context on that analysis using some geometry tools, and then assessing some other indicators, looking at volume, momentum indicators, things like that, to get an idea of how likely it is that if it's not the triple zigzag, that we're about to end the correction, or that we might even be going up from here, from this sideways pattern that we've been locked into for the past week or so. Alright, so here's a reminder of what I left you guys with. It might be slightly different since I had to remake the chart, but basically I had triple zigzag combination as something pretty likely, given the wave shape and the series of lower lows and one higher low here, and lower highs throughout the entire correction. I've got it as ABCW. I think a lot of analysts have that. It's very hard to argue that this is not, at least from Elliott counting perspective, almost a perfect zigzag. You've got an X wave here. It's a light retrace, thereby favoring a zigzag combination of some sort, a multi-zigzag pattern, and not a sideways combination. I think this light retrace invalidates that. This can very credibly be seen as a zigzag with another X here. And we measured the ratios and the time spent putting in these relative to how much price was traveled, and there was some confluence there, if you guys recall, some mathematical confluence. And then we used the same theory that whatever doesn't get put in price, as far as price traveled, often gets made up for in time, to measure this W relative to this Y, and then to project the Z as being, of the same height and therefore time, give or take, of the X, right? So this is what we came up with, something like this. If this is what's going on, I have us on the A, this sideways pattern here, which is very difficult to count. We'll give it an attempt towards the end of the video, but for now, just looking at it at a high degree, as a 1, 2, 3, some kind of 4 with a 5 down here, and I've used my favorite way to measure that, taking from 0 to the end of the 3, pulling it up to the end of the 4. I've got that in already around here at this peak. And then, 618, 50 to 618 is a very likely landing zone for the 5. And so I've got the 618 around here, around 5190 or so, and part of the reason why is, if you guys recall, we did a bunch of algo pulls that were dominant algo pulls. We did this one, end of the, whoops, I got the wrong tool here. We did the end of the B to the end of the C for the W, and that was the one most perfect, that was the most perfect halfway back algo setup. It was almost to the tick 50%, and so that the pull from there leaves you at 33.53, which is where we got the C roughly ending. But for this stop here, the next major pull from the beginning of the A of the Z down to the end of, sorry, the Y down to the end of the Y. Where is it? Sorry, the end of the A. I'm sorry. This was the very clean golden pocket retrace, and you can see here the minus 236 is at 51.69, which is, you know, very close to 51.93. So very likely a next stop. One thing I'll note is the 618, the next major algo target after that, is quite confluent with the minus 236 of the dominant halfway back, the first major algo setup for the entire correction. And as we did last week, just want to remind you guys that when you do the same exercise here from the beginning of the B to the next major swing low, and you can see a nearly perfect golden pocket retracement just like here, which to me lends a lot of credibility that we're looking at a fractal pattern here between the Y and the Z. But anyway, the minus 236 of that is a little bit south of 51.90, but the minus 618 is highly confluent with the minus 618 of the previous algo setup, which is, you know, within a couple $100 of the minus 236 of the, in my opinion, dominant and major setup. It's the cleanest algo setup of them all at, you know, halfway back. So in summary, I've got the first pit stop here for the A at around 51.90 or so, give or take. Give or take $100 or so. Obviously, this is almost never that precise. Then you've got a B going up, and then a C coming down. C was the longest leg for each one of these actionary waves for this triple zigzag. So you've got C here being about 1272 of the A, I think it was, or 130 around there. Then this C obviously took a bunch of time. You can see here, if this is the entire corrective sequence, the A ended sharply here, B took a while, and then C took it down some more, but took the most time. It was the longest in time. So if A ends around here, I'm estimating B around here, and the C to take longer again, to end at around this hot box of major algo targets, you know, something like that. A couple of weeks ago, when I first did this, we went into quite a bit of detail with Elliott and figuring out these projections and doing some calculations with time and price and such. So I'm not going to repeat that here, but what I will do is try to identify some geometrical confluence to support this case further. So whenever I am looking for geometrical clues that a particular count or particular pattern that I think might be happening is likely, well, I pull all the tools out, and the goal is to find clues. I think any single tool individually isn't that powerful, but when you start finding confluence, well, you can get much more confidence that a count that may be credible within an Elliott context is also likely to happen. So the first thing I want to do is pull up, I think you guys have seen me use this before, but if not, then it's a tool I often use, the Fib channel. So one of my favorite tools for geometric analysis is a straight up parallel channel, but we've already done that a bunch, and it shows very credibly that we are headed potentially to this ending zone. Actually, let me just illustrate it since we're trying to build a case here. So let's just add that to the toolkit of tools that we're going to use to build the case. It's a very straightforward, simple parallel channel, and as you can see, price is adhering very neatly to it. The median line is of major influence. That's always my test. and look at where it ends, right around here, right? The median line, very close to kind of where we had it projected. Let me hide this. Another tool that I often use is the fib channel. Very similar to its parallel channel cousin, other than it actually pulls fib trend lines across all of it. Let me see. Let me get it right on the dot there. Okay. And move this one down. And typically, it's not just the median line, but also the median line is the 50% line here, this one. But actually, let me change this to white so you can see it better. Not just the median line, but also the major fib levels. You can see the 236, 382, 618, 786. You could even add more fibs, but I think anyone would agree that these are the dominant major ones. I know some people have slightly different interpretations of this. You know, some people use a 76%, 75%, etc. Everyone uses 618, of course. But you can see visually that these fib levels are very influential geometrically. They act as support and resistance throughout the entire move, allowing for some wicking. And no, not surprisingly, we stopped right at the 382 here. And boom, right at 236 here, got another reaction. And you know, in my opinion, if it's going to go up a little bit, it ain't much, and before it heads right back down, right? So the 50% line, which is the median line, once again, very much like the regular channel, has this ending around here, but so does the 382, so does the 236. There's a lot of different places where price could travel and end around this area that we've got projected. Another good tool is the fib fan tool, and this one is very similar to the Gann fans. The big advantage of the Gann geometry tools is that you only need one pivot, because everything's anchored around the all-important 45-degree angle for the 1x1 Gann square. Then you can literally just put, you know, let's say there's a pivot here, you can put a square here, and you can start analyzing path immediately without a second pivot being put in. And obviously, as price maneuvers to the left and right and up and down, you can scale the arcs and where they hit the price to explain the price path the best, to try to fit it into the geometry the best, moving it back and forth and scaling, you know, the chart up and down some. But the point is, you can start analysis right away. But when you have a lot of pivots, you know, whatever Gann analysis there is, there's also a Fibonacci equivalent, and the Fibonacci equivalent of the Gann fans is the fib fans. So just as a test, let me take it back all the way to the top. We can go from swing high to swing low right here to see if the fan captures interesting geometry, meaning if price is moving very technically from geometry standpoint. And well, unsurprisingly, look, you know, yes is the answer. It's contained very well within these different fan lines created by different Fibonacci sequence numbers and ratios. Even, what is it, this would be in July 15th. This was put in February. So 5.5 months after the fact, it's still geometrically significant, having, you know, called this major turning point here in the momentum and in price direction, and acting as resistance right here for this move, right? The A of what I have as the X wave. Okay, so we've confirmed that the calibration in this geometry makes sense for fib fans. So let's pull it from the next swing high, which would be here, to the next swing low, which would be here. And let me make it green or something so you can see it a little bit different, see it better, and be able to differentiate between this and the fib channel. I may have to hide some stuff here. Well, you know what? I'll hide these boxes. Taking up a lot of real estate, not adding much to the analysis now that we've already talked about how we derived this ending point. Whoops, I hit the wrong thing. Okay, so looks like I had both. All right. Once again, swing high, swing low. And you can see here that this is definitely, oh, I don't know what's going on. Oh, yeah, let me take out. Huh. That's what happens when you got too much on the chart. Let me, all right, here. Third time is the charm. Swing high to swing low. Yeah, so you could see here, especially if I hide the fib channel, how influential this geometry is, right? Acting as support, resistance, resistance here, support here, contains this entire move. Then boom, right there, stops here at the 618, stops at the 50%. Back down with a little bit of a reaction at the 618. It's now between the 618 and the 786 and button up against the 618, right? Once again, you know, lots of paths to get here while respecting these different support and resistance levels, either this way or this way, all the way down to our projected endpoint. If we bring back the fib channel, I think you could manufacture some kind of geometry case for this hovering down this green 618 line, finding some support at the 382, eventually breaking down to the median line, and then converging around here, right? Would be kind of the way I would read this as primary. And not to leave out any major tools, going back to the fib arcs that you guys have seen me use now on several occasions. Swing low to swing high to center the arc around here, and then to see where there are major levels for potential support and resistance. And before we do any further analysis to the right, let's just look to the left to see if historically this explains price well, and I would argue it does. You know, there's a major reaction here, major reaction here. This arc here, the 618, calls the bottom here pretty closely. 786, major reaction. The 886 here, another major reaction, hugs all of this, and then between the 100% and the 886 contains all of this move, and then beyond for, you know, Fibonacci levels like 236, 272, 382, beyond where we actually pulled the fib from here to here, still very, very geometrically interesting and credible here as far as responses and major reactions, support, resistance. So where does this end? Well, poetically, if this 1272 and 1382 have bounded the first initial portion of this correction, they also do the same thing. These lines that are close to each other are the 236 and 272. That's how I can tell. And they're calling an end to around this level, which is not that far from where we had it projected. And by the way, if you think this is a bunch of nonsense, then how do you explain the fact that 382 is exactly where this is stopped right now, and it looks like it might be headed down, which is confluent with this fib channel 236 line, this white one, and this 618 green line. I mean, there's a lot of confluence right here. So it's just not surprising at all to me that the BitMEX-inspired fuckery that took price up by a few $100 and then immediately back down converged right around when the green 618 and the white 236 of the two different fib tools converged. And then when they met with the fib arc, which is a third geometry tool, 382, that we're stuck right there. And to me, looking like we're headed down, right? So I'm expecting, again, this seems like a credible count to me, given what the major structural support and resistance levels and flow of capital suggest we might be facing in the next what is it, October, November, December, January, maybe February, March, Q1 of next year, maybe as a potential ending point. And if you're not a fan of Fibonacci, I don't know how you can't be, but if you aren't, if you're the one or one of the three people or whatever who in the world who don't believe in the relevance of Fibonacci, at least in the markets, if not life in general, then let's pull out my boy Billy G, or W.D. Gann. W is William, so I sometimes call him Billy G. And again, I don't need to adjust this because I've calibrated the geometry already 5 or 6 different ways. So I know that this is an interesting geometry as is calibrated here without moving the y and the x-axis any further. So let's slap on the Gann fan, or the Gann square, and see what Billy G's got to say about this. So what I would do is I would look for this first arc here, where you see my mouse moving, to act as major support, major resistance at an interesting level. So maybe this, I think this right here is where I did it last time. I just found that the multiple taps here, the triple tap, boom, 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 of support before it breaks through, and the double tap here to be very interesting from a geometry standpoint with in confluence with this first arc. And if you draw it there, look at that. This entire B of the Y is captured, allowing for some wicks up and down by this second set of arcs. And then the third set of arcs nails the entire second X, as well as what looks to be the first major move of this A. You could see visually. And where does the next set of arcs end? Well, look at that. I couldn't have charted it any cleaner than that. And again, I will argue that because I didn't calibrate it any differently from all the Fib tools that I've used, the confluence between Gann, the 4 or 3 different Fibonacci tools, the parallel channel, as well as the Elliott count with the algo targets all aligning around here with some of the math that we did around extrapolating where the Z might end as it relates to the price and time traveled by the Y. I mean, that's a shit ton of geometric confluence right there. So whether you're bull or bear, it's hard to ignore that much evidence. Doesn't mean it'll happen, but you are not doing your job as a risk manager if you're trading blindly without considering that possibility. So given that that's so many months away from being put in, and it's difficult to know exactly where and how price will travel all of this, where does that leave us as from a trading perspective? If we want to arbitrage some of the price inefficiency out of Bitcoin in shorter time frames, what do we do, right? In other words, what's my view of the micro, at this degree? So let's zoom in there and see what we can find. So here I have the same chart cleaned up without all the markings. It's incredible how clean it looks without a single thing on there but the Vegas waves. And so first point I wanted to make is when you're looking at whether or not this could potentially turn upwards, or upwards by a lot. I mean, of course it could move up a little bit, but can this be some kind of breakout of, say, this major trend line, right? Is that a credible path for price? And to me, I mean, you can go back and rewind the video and watch all the different tools and where they land, or you could try it yourself, trying to replicate my moves. What you'll find is that the geometry suggests that this would be very, very difficult to do, especially in light of, where's the, in light of this. Where is the fuel for the big pump up that's going to break that through that trend line? I don't see it. But more importantly, it would have to go through 5, 6, 7, even 8 different major structural resistance levels provided by everything from simple trend lines like this one to more advanced geometry analysis that we just did. And on top of that, it would have to crush through these Vegas waves that have been, it's been kind of touching them and flirting with them for the past week or so, or 3 or 4 days, and just hasn't been able to get through. Even after the BitMEX inspired pump, it retraced it immediately, got smacked right back down, and we're right, stuck in there again. Now these are at the 3 hour, so a very credible time frame to look at these higher time frame EMAs. Recall the Vegas waves are 144, 169, and 233 EMAs. That's all they are. There's nothing magical about them. So that anything with a 3-digit number, EMA or SMA, is best analyzed at the 1 hour or above. It's just a substantial amount as opposed to like a 20 and a 50, which is more commonly used for smaller time frames. But anyway, the point I wanted to make was I want to turn price off here. And if the members are watching, I apologize. I've done some of this, something similar in prior analyses during my daily updates. But the point is, and we can do this at any time frame above an hour, oftentimes price will peak above a moving average indicator. Okay? That doesn't mean jack squat with regards to whether or not the trend's going to break. What's significant is the combination of 3 factors. Price cleanly and aggressively breaks through and stays broken through. Then the Vegas waves or any other moving average converge and then go through what's called a crossover. So here's a bearish crossover where the smaller time frame, the orange and the blue smaller time frame EMAs, again this also works for SMAs, cross over the longer time frame EMA, which is the red one, right? So this crossover happened, and you could see that crossover sustained all the way until this more bullish crossover happened, and it captured the majority of this big dump. And then this tiny little crossover happened, but look at the dotted line of my little mouse cursor, right? Follow it down. So this crossover right here, coincident with this air pocket of volume. There's nothing there. There's nothing moving this up. And then shortly thereafter, this big red sell-off happened, and it crossed over right again. Okay, so even just a crossover by itself doesn't mean much. It's got to be a crossover in price against all moving averages that you're tracking, and then a crossover in the moving averages themselves, shorter to longer time frame, and then there's got to be some volume to sustain the move. That's very important. People often forget to analyze the volume component of that when they're using these momentum indicators, and there's no momentum that's sustainable without volume, fellas. So if you're ignoring that and just purely going by moving averages, well, you're going to get faked out a lot like you did here and here, right? Look at how much volume accompanied this crossover. See? Anyway, this one crossed over very briefly and then crossed over again on, what is this? Volume. Yes, on volume. And it sustained it, and then all the way here it crossed over again. And here it did it on decent volume. Look at this. I mean, nothing compared to here, but it wasn't this air pocket that was coincident with this, right? So it did it on good volume, sustained for a little bit, and then crossed over here. And soon after the crossover, volume picks it back down, boom, all the way here, and then there's a crossover here that brings it back up on good volume. And that's sustained for a little bit. And then another crossover here, sell off on good volume. Point is, when price, which you can't see here because I've hidden it so you can see the Vegas waves better, crosses over, and then the shorter duration moving averages that you're tracking cross over the longer duration, and then there's follow through in volume, it's a very confident indicator of a change in trend. So change in trend, 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 and then it crossed over here with good volume, and now we're boom down, and at least at the 3 hour, we're far from a crossover. Okay, now on the lower degree time frames like 1 hour, there is a crossover here. You can see it, right? But where is the volume? To me, this is not a credible crossover from a trend changing perspective. You know, crossovers happen in 2 instances, during retraces and reversals. This is not a reversal crossover to me. It is much more looking like just a retracement, which will then, like it did many times before throughout the correction, head back down. Actually, let me just bring price back out. There it is. So you can see throughout, you know, there's lots of little crossovers here. Well, this one isn't even a crossover, it's just convergence, but the best example is the one I gave you. Well, even here is a crossover here, and then a crossover immediately thereafter on no volume. See, the lack of volume here was telling that this was not going to sustain. This looks a lot like where we are now. Crossover here on no volume here. Lack of volume. See how high this moved, but no volume. It was almost foreshadowing of this. And then immediately crossover here on decent volume to propel it further down. So are we going to see one of these things where we just balloon up here and just crush this trend line? I guess it's possible, but I'm not seeing any evidence of that. Now, if you were to see some significant bullish divergence on any major indicator to move this upwards, and then maybe volume will come a little bit later, yeah, I could maybe believe that, but we're not seeing that right now, at least last time I checked. I mean, if anything, yeah, I mean, there's not even hidden bullish divergence. It's just confirming price. Higher high here, lower high here, lower high here. You know, and then this momentum or trend strength indicator called ADX that I've used is showing a very weak move as far as momentum is trend strength is concerned. Looking very much like it's going to retrace downwards. So let's try to get an Elliott count as to what's going on here. This is by far the worst type of structure to analyze with Elliott, in my opinion, because Elliott, because it's a pattern recognition system, is by its nature somewhat subjective, and when you have this much sideways going on, well, I mean, the amount of subjectivity increases even further because there's so many different ways to count something like this. I would say that there aren't that many different ways to count it adhering to the rules and guidelines well, so maybe that's a start, but it's you know, there's so much overlap, and there's so many different types of threes that look like fives and fives that potentially could be threes, that this is peak subjectivity when it comes to Elliott, which is why I started my analysis with anything but Elliott, looking at the higher time frames, looking at clues as to where structural resistance and support might be, looking at momentum, analyzing you know, potential fractal patterns, algo targets, you know, things like that. So here we are at the 15-minute trying to figure out what this sideways fuckery really is. My first rule of thumb when I'm looking at something like this is, well, are we looking at something corrective or are we looking at something motive, right? And the rule of thumb is simply, if it's this ugly, 9 times out of 10, if not 99 times out of 100, it is corrective. It doesn't have the impulsive slope anywhere, I guess here and here, but you know, so small relative to all of this, and there's so much overlap that to make something motive out of this would take a lot of imagination, let's say, or ridiculous bias. So looking at it objectively, I think our initial posture has to be that this is some kind of corrective structure. But if that's if that's what it is, let's do the opposite side justice and try to figure out if we could come up with a motive count out of this. If this were motive, it would end the correction from 8.5K down to, what is this, 5.8K here, because any motive sequence can start at anything but the actual absolute price low of the piece of chart you're looking at. So this has to be the beginning of the one. Now, where the one is, it's very subjective. This to me looks like a well-channeled impulse. this to me looks like the second best channel next impulse, and then this one is the third most likely to be an impulse. But even these could be argued to be three-wave structures. A, B, C, A, A, B, C. This one is the only one where it's very difficult to argue this is three-wave, in my opinion. Clearly, just the subdivisions point to a five-wave move. Even if you channel it, the end of the 2 to the end of the 4, pulled to the end of the 3 to project the 5, 3 here, the 5 almost to the tick and lands right on the upper boundary of this channel, which is exactly where it should land as an impulse. So if we're looking for a motive sequence up, we got to start here as a 1, right? And that's where the challenge begins. You know, this parallel line I've drawn here is the bottom of this move down here, but it's also the bottom of everything to the right of it as well. So if this is a 1, more than likely this is a 2. Let's see. Yeah, somewhere between the 50 and the 618. So not a bad place for a 2 to end, although very sharp to be a zigzag, I would say. Looks almost impulsive, but I guess you could get a... I initially had this as a 1, 2, 3, 4, 5, but you know, 1, 2, A, B, C, I guess qualifies as well. But if that's a 1 and a 2, then all of this must be some kind of 3 or a 1 of a lower degree, right? And for this to be a 1 of a lower degree, it's challenging to believe that. It's just substantially bigger than the 1 of a higher degree. Well, I guess it's not bigger. So I guess it could be 1 of a lower degree. But if it's a 1 of a lower degree, it's got to be some kind of diagonal given the overlap here, right? And that's where it's very difficult to count, because if there's some kind of diagonal, we had a 1, 2, 3, 4, 5, well, that's credible, except this 4 goes below the 2, goes below this 2. You can't see it as cleanly here, but if I zoom in, this 4, see? It goes below this 2. So you can't have it as 1, 2, 3, 4, 5, 1 of the 3 if this is the 1, 2, 1 of the 3, 2 of the 3, 3 of the 3. You can't, that's an invalid count, right? So then you're forced to bucket all of this into some kind of truncated correction. It can't be a triangle because it's in the 2 position. So, you know, it's got to be like an A, B, and then some weird 1, 2, 3, 4, 5 or something. Well, that doesn't even work because this 4 violates the 2. As you can see, very hard, very hard. You know, you would have to have some kind of WXY double sideways combo where this is a zigzag ABC. You've got a flat ABC and then another flat ABC, right, as a 2. Well, first of all, it's a sideways pattern as a 2. That alone makes it not that probable. Second of all, it's a really ugly 2 because, it's a really ugly combo because, you know, this Y doesn't achieve a price extreme on the upside or downside. It just kind of just meanders sideways in triangular fashion. So that also isn't the most probable count, but I guess you could have all of this to 2 if you want to avoid this being the 3 or a leading diag 1 that doesn't really fit the picture because this is this proposed 4 is lower than this 2 as we discussed. So what are your options? I mean, you know, 1, 2, and then all of this 1 of the 2, 2 of the 2, working in the 3 of the 2. But if this is the 3, sorry, 3 of the 3, 1 of the 3, 2 of the 3, 3 of the 3. But if this is a 3 of the 3, it just violates every wave personality guideline in the book. And by the book, I literally mean the book, you know, the Elliott Wave principle. First of all, this, if you channel this move, I'm not talking about an Elliott channel, but just the overall price extremes up and down, and then you take this slope of the median line, it is, if it's even half of the slope of, yeah, it's 33 degrees, right? If it's even half of the slope of this, I'd be shocked because this looks vertical, like it's almost 90 degrees. So not the exact slope measurements aren't what's important here, because if I recalibrate the chart up or down, left or right, I'll lose this these angles. But just on a relative basis, this is twice the slope of this, right? So how credible is it that the 3 of the 3, which, you know, this is the 1 and this is the 2, and then this is 1 of 3, 2 of 3, 3 of the 3, which should be the most impulsive, the most aggressive and impressive move, looks like this, right? Very, very unlikely. You know, I don't want to completely discount it, because it's in the realm of possibility that this could be 1 of the 3, 2 of the 3, and then it just shoots up here in vertical fashion like this for a very aggressive move. But again, the lack of volume, the lack of any bullish divergence, etc., invalidates that. But, you know, if I had to come up with a bullish count, and I had a gun to my head, and I had to make it rules and guidelines compliant, I would do something like this. 3, 4, and 5 obviously are not measured. I'm just putting it there as placeholders. And then I would go like 1, 2. And this is, by the way, what a balls deep 2 this is. That looks 5 wave. But anyway, if we had to do it, it would be something like this, where we're working on the 3. And then I would have a series of 1, 2s. Oops, sorry, I lost it. And I'm not doing this for any other reason than what I said earlier, is that you gotta have an opposite side count that makes sense, that is rules and guidelines compliant. So for those of you guys who are trying to find something motive out of this would be the way I would do it. 1, 2, and then this would be 1, 2 of the 3. I mean, this is how ugly it gets when you're trying to make something impulsive or motive out of this move. I'll make this a lower degree even. So this would be the way I would count it. I think I would be forced to count it this way if I were to try to be guidelines compliant and rules compliant. 1, WXY, where I have a zigzag here at W, a flat X, and then a flat Y. I guess you could call this a zigzag Y too, but because it's a double zigzag, it would make this a double zigzag and doesn't achieve a price extreme. I think it counts better as a flat, being a sideways combo as opposed to one that is expected to reach a new price extreme at the end of the Y. So WXY, and then this would be 1 of the 3, 2 of the 3, and this would be 1 of the 3 of the 3, 2 of the 3 of the 3, and I would really expect to see something like this, straight vertical, that travels a lot very soon. Otherwise, this loses complete credibility. The only reason I'm even entertaining this is because the 1 of the and 2 of a 3 can still be, you know, anemic looking to set up and base a very powerful 3, right? So, you know, if you're a bull, this is what you're hoping for. I think that's challenging, to say the least. But there you have it, you know, bullish count. Now, from a bearish perspective, what is it? That's equally challenging. Anytime you have 1, 2, 3, or 1, 2, and then 1, 2, the 1, 2, and then a 1 or a 3 can be a zigzag. That's how I initially had it. It just counts the cleanest. You know, the C leg is almost approximately the length of the A. I think it was like by 80 or 90%, something like that. Very close. Oh, whoops, what am I doing? Wrong tool. I meant to pull this guy. Let's get, there it is. Yeah, so almost 886. 88.6% of this. So, you know, very, very well channeled, like this one. And although this is not an Elliott channel, but just in terms of the slope, to do the slope comparison, and almost exactly the same. So pretty compliant with the guideline of equality. And then this being some kind of sideways is perfectly fine for a zigzag. You don't, there's no qualifier for what the B of a zigzag must be. It could be anything. It's most commonly another zigzag, but it could easily be a sideways combo or a flat or a triangle or all types of other things. So this to me makes a ton of sense. But then what is this, right? And so I initially had this as 1, 2, but given how deep this retrace was, I think we're now, are we at the 886, 786? Yeah, so we're somewhere between the 786 and the 886. It qualifies, but again, not the most probable situation. And then this being some very ugly zigzag, it would be a truly ugly zigzag. So then what else is there? What other options do we have? This is 1, 2. This would have to be all, the beginning of the 3, one of the 3, and this is not looking very, very motive either. It looks very corrective still. Looks to me like maybe even a triangle setting up A, B, C, A, B, C, A, B, like that. So whenever a correction doesn't work easily from the price extreme bottom, then I move it 1 pivot to the left or even 2 to the left to figure out if it began as some kind of expanded flat, right? So the members know I initially had this counted before all of this was in as an expanded flat. It counted very well. A, B, C, 1, 2, 3, 4, 5, right? The measurements are very, very clean. A, B, C. Move it down to a lower degree. And oops, the measurements are very clean. Length of the A here, we're expecting the C to be, about 130% of the A. And here you have, between the 1272 and the 1618, very credible length for a C, right? The length of the B, approximately the same relative to the A. So from here to here, back here, and the B is just shy of the 1272. So from a measurement standpoint and a wave personality standpoint, this is a flat, a zigzag being sharp, flat being sideways takes a lot longer, zigzag is sharp, and then the impulse being so cleanly upwards and aggressive in slope makes a lot of sense, right? So if that's the case, and this is still an impulse, which to me is the second cleanest wave to count amidst all of this, then we could still maintain this as some kind of combination, whether you call it a double zigzag, which is not my favorite count because, first of all, this is a pretty ugly zigzag, but more importantly, I'm expecting the Y of a zigzag to achieve a new price extreme more often than not, and the X of a double zigzag not to retrace so deeply as it does in a sideways combination. So I'm looking for 50 to 618 or so for a double XY that's a double zigzag, as opposed to 90%, which is the retracement that is a strong guideline for a sideways combo. And I believe this is exactly 90% or damn close. Yeah, I mean, so it certainly goes beyond the 886, so it's even beyond 90%. So it's a perfect X wave. A B C as a flat that retraces almost 100% of the W, and then a flat Y. A B C, 1, 2, 3, 4, 5. Right. So W, X, Y. Now you're wondering, wait a minute, if this is a WXY, I thought you couldn't have a combo within a combo. Well, that's not true. You can have a combo within a combo, just not in the actionary waves, only in the reactionary waves. So let me just label it so I can explain myself. I'm going to take it down way sub-micro. Okay. So right now, I'm building the case for a W, X, Y that looks like this. Okay. So if this is, I guess I should be a higher degree. If this is what's going on, and I've got an expanded flat W, which measured perfectly almost, as I showed, and then a zigzag W, flat X, flat Y as an X wave, okay, this is a reactionary wave in a combination, and therefore is allowed to be a combo itself. You can't have a combo as a W, you can't have a combo as a Y. It has to be a simple corrective pattern. Okay, this is the source of a lot of confusion, but the X itself can be all types of crazy. So let me just even segment it so it's visually cleaner. Here, here, whoops, here, okay. So this to the left, W, in the middle, X, and then this Y. So what is this? Well, since this is an expanded flat, there's only a couple of options of what this can be. First of all, it can't be a combo. We already talked about that. Double zigzag, triple zigzag, you know, WXY, WXYXZ, all out the window. No, cannot be. So since it's a sideways combo, it can itself be a flat family correction. But this is so impulsive to me in terms of the count that, and then, you know, more often than not, the Y tends to alternate the W. So if this is a flat pattern, this tends to be a sharp pattern. So if that's the case, well, what sharp pattern is there left that it could alternate with? And it's simple. Obviously only one, the zigzag, right? So A, very sharp and ugly B, but there it is. And then now we've got a C in progress. And if this is a flat, A, B, C, as a 4, okay, which is very, very much the most likely place for a flat, then what would we project the 5 to be? Once again, my favorite way, 0 to 3 off the 4, 50 to 618, right? So I would expect the Y around here, and then the reason why I put it a hair above the 618 is I'm not expecting it to fail, although it very well could, right? This could be the end of it, so this could be the Y here. It measures reasonably well. You could have something like 1, 2, 1, 2, 3, 4, 5. This is a little triangle. 3, 4, 5 of the 3, and then all of this the 4, and then 1, 2. We're working on the 3 of the 5 to put the C leg of the Y in. What else can it be? Well, it could be a flat where you have the ABC here, ABC here. If you want to call this 3-wave and call this 3-wave out, I don't blame you. And this is an impulse, so you end up in the same spot. Whether there's a zigzag or a flat, same thing. You project it roughly about the same. It could also be a triangle. And that's kind of, that's something I've been toying with. And if this continues to meander sideways like this and you know, takes forever, like another 1, 2, or even 3 days, might be exactly what it is, you know. Like I said, this could be counted as a 5-wave. It could also be counted as a 3-wave, very credibly. A, B, C, or 1, 2, 3, 4, 5, right? So if this is ABC and then this is ABC, you've got the A and the B of a triangle. This could be a C, and it would be a truly ugly count, no matter how you count it, given all the overlap, but C. Now we're working on the D down or the D's in it. A, B, C. And then working on the E. A, B, C. Right? Again, if I'm right, and this is a combo that's sideways, and it has to be because it starts with a flat, then whether you count this as a double 3, or as some simple failed zigzag or something, which it's hard for me to count it that way given the overlap between this 1, 2, and this 4 here, but whatever. If you clump all of this as one corrective pattern, whatever that pattern is, and you clump all of this as another corrective pattern, from a rules and guidelines perspective, there's really just only 3 things this can be. It can be a simple zigzag, a simple flat, or a simple triangle. That's it. So no matter how you count it, we're nearing the end of this corrective structure. Only one, well, no, 2 of those 3 outcomes has this putting in a slightly newer high to here. Given how deep this retrace is, it may in fact be just a flat might be the cleaner count. But even as a zigzag, because the B of this Y retraced so heavily, I'm expecting, something like this at the most, before it's the beginning of down. And if it's a triangle, well, it's not the craziest thing in the world, given how ugly all of this has been, for this not to be the cleanest triangle in the world. But if this is the height of the A off of the B, well, you got a 7-8-6 relationship to the C if this is the end of the C, right? So it's not crazy. It's a Fibonacci number. It's not crazy. Very well could be that. But there you have it. I think those are the 3 things I'm looking for. Obviously, if this is a correction that lasted from August, what is this? August 10th, and today is the 26th. So it's been going on for more than 2 weeks. By the time it ends, might be 3 weeks. So that's a lot of basing. That's a huge amount of consolidation on very weak volume, anemic volume, with a lot of overlap and zigzag and sideways fuckery. Well, this is not financial advice, but whenever this final move gets in, you know what's very, very likely to happen next. So be so informed, and I'll talk to you guys next week.